Good morning, everyone. It is 7:35 a.m. New York time. I just wanted to show a very recent trade. This one definitely would have got filled on the NASDAQ index 5-minute chart. Okay, this is a stock. This is an index that's just been on fire, making record highs after record highs. And of course, one of the reasons is because it's got all the big tech stocks in there. So that really makes a huge difference. But I just want to show you this in real time, and versus me showing you maybe when it's gone up or down, okay, which would be fine too. I mean, here's an example. These are the kind of trades I love, where I get a signal where I can see clear resistance. Okay. So anyway, we'll come back a little later, see what happens. We're just kind of into the third bar, just opened up. And I'm going to bring a bunch of these trades. Today's Thursday, and I'll bring some trades Friday, and then I'll share this video with you on Saturday. Just want to take a quick look at gold, because this market has just been going crazy. Everybody's been talking about it. Some of the thoughts are because the dollar's been selling off, the gold is getting strong. So if we go back here, just remember, today's only August 6th. This is August 4th, right? So a big run up. This caught like $60+ an ounce. Okay. Now in the 15-minute, it didn't catch as long. But this is where, if you want to take more trades, let's just mark that. Go to the 5-minute, and more than likely you'll catch the trade. Now here's an interesting thing. Back on the 5-minute, we had multiple signals fire off down at the same level. The 15 had one. Okay. Of course, this is going to be ignored, and this wouldn't even be filled. And some people say, does this thing repaint? There will be times where, if it uncrosses into bar, the bar might disappear. But you can see here, it's not like one of these situations. I've seen indicators where it only put an arrow in the absolute swing low and swing high, like let's say down here and up here. Okay. But that's why I have safeguards to help remove any of these ones that are a little bit premature. So once again, this was the area that the 15-minute didn't catch the short, sorry, the long. We did have a counter trend trade up here. We had another one up here, which could have been like a little drop down. If you're scalping gold, you could have made something out of that. But you would have had to have been quick. Okay. But keep in mind, let's say for some reason you just took that, you wouldn't just say, okay, I'm going for broke. In other words, you put your target in, you put your stop, and then you wait to take a full stop. There's no need to. This price activity is not indicative that it's going to break down in your favor. So you'll learn strategies to deal with this. Okay. I would rather lose 20-30% of my initial stop, 40-50% of my initial stop, versus waiting to get completely blown out. Okay. Caught another beautiful swing low here. This is a trend trade. This is a counter trend trade, which worked out very good. Depending on how you look at the market, all right, I'm going to just mark that there. You could say that's a double bottom. Of course, it's not really a double bottom off of a big down thing, but it's like a retest of support. But when you look at the big picture, oh, sorry, let me go back there again. Where was that hiding? Oh, it's back here. It's just, so it's really not, yes, it's a double bottom, but double bottoms typically, once again, follow a down move. This is more of a retest of, okay, support resistance. And the algorithm, in the big brokerage firms, they love buying and selling these levels, so something to be aware of. So once again, if you say, wait a minute, this area is showing significant support resistance, and you get an arrow, you've got a high probability trade just on that alone. Okay, so anyway, we will come back later in the day, see how gold is faring. You can see right now it looks like it's trying to make new highs here. So anyway, time will tell. Let's take a quick peek at the pound Swiss 1 hour chart. You see the market is basically kind of trending up, but this is where it can get really tricky because, okay, we had a sell signal which worked out. I mean, it was really choppy before it finally broke down, right? But it's breaking down, so you're not really thinking, you know, that's a typical up leg, right? But this is the way trading is. There's a lot of messy charts, okay? I would think just looking at this from here, it's not the typical pattern when things start stair-stepping up in a breakout into a trend, right? But it did get this. I mean, that was depending on how you played that. Let me just find the tool here. Just initial. I mean, that ran up 27 before it came back to your entry point, but then eventually went up 88. If you drop to a, let's say, 15, I don't think the indicator went back that far. Let's see if a 30 did it. See, a 30 got it. So here was the 15-minute entry. Okay, you got that pop up, and then this one here was the one that actually didn't back off. That ran 70, right? But let's go back to our hour. Up here, most people aren't going to sell. Trend traders are not looking to do that. Okay, so we had a sell signal, big drop, right? Then finally we had like a perfect signal down here. And these are the ones I really love when everything lines up. And once again, there's a couple things I haven't shared with you that would really kind of ignite this whole thing in a good way. Where this is retesting a significant swing low. That's a run up of 130. Should be able to catch. I mean, you think you could catch half of that? All right. Same thing. If this thing dropped, if you took this, say you get filled down in this area here, right? It goes 14 pips against you initially, but then it drops 140. Do you think you could get half, right? I mean, these kind of trades, when they're really falling, it is much easier to catch the bigger piece of it. This was a trade, once it rounded on the other side, you could go long, right? So you're going to be filled over in this area here. 144 pips to the top side. This is one where you're going to probably get this without trying up here. In other words, because it doesn't back off at all. So see, you get in here. That's 99 pips, believe it or not, right there. So we've been, the advantage, as I've said a bunch of times if you've been watching any of my videos, is this is a strategy and a set of tools that you catch all the different market environments. You're not locked into, momentum or momentum breakouts or like reversals. And you've got to be able to adapt really quick. In other words, here's a situation. You get a trade, it drops 46 pips, but you got to be quick on your toes, okay? Otherwise, you could just come back and find out that you gave it all back. But yes, depending on how you handle it, can you make 10 pips even out of that, right? Another situation, this is the reality of trading, is market's messy. If we're looking here, we've gone down, then we're starting to go up at these big drops, goes up. It looks like it could be kind of breaking sideways, but now you get a signal up. This is a situation where, again, in here it first goes up 62, and then it eventually drops probably half of that. But then overall, it goes 163. So I ask you, could you get a third of that 50, right? If you use a bigger, more liberal trailing stop, you could get more. But this is the kind of ugly type of trades where you get in. Let's say you got in down here, and you manage to hang in here, you're thinking, wow, amazing, I'm up 135 pips. Well, now from here it drops 81 again, you know, taken back. So you have to decide, am I in this for the long game or do I have a target in mind? Same thing here. You get in over this area, now you're up a beautiful 173 pips, but you have to sit, do that, and then eventually after all that, if you still hung in there, you didn't make any progress. So just when it looks like the market's trending up, it's breaking down, right? It drops a quick 88 pips. Once again, this is the kind of trade, once you're in, it goes quickly. So if it drops 88 pips without backfilling, do you think you could get 30, 40, 50 out of that 80, right? And then let's just mark this here, see if maybe on a quicker time frame we caught any of this. So we didn't catch that. We did catch a trade on the 15-minute. That went up 40 pips before it dropped. Okay. So you should be able to get 15, 20, 25, 30, you know, depending where you put your stop. And then finally, let's see if we can get anything on the 15-minute here to the upside. Yeah. Now this is an example of ugly trading. Okay. You did get a signal down in here. Right now that's up 79 pips, but it's a mess. I mean, you're like on this wild roller coaster, okay? This trade is breaking down here. I don't know if it would have satisfied the initial criteria to get in here without my other indicators on the chart, but I know it would have as it starts to roll back over, especially through the original arrow point. So anyway, that's it. We'll come back and see how the pound Swiss does a little bit later today. I just want to point something out very quickly. One of the beauties about the software is that it does a lot of the thinking for you. And what I mean by that is that this is gold. We're going back in July 8th. Now at this point, let me just mark this chart up here. I'm just going to put a few lines so we can easily get our bearings. This is a 4-hour, once again. When you see it here, right, it had already been breaking new highs. It hit that 1800 level, right, which would seem like a big barrier. There was probably people saying it can't go higher, you know what I mean? It's just overbought. So if we go back to our 4-hour where we had the signal, and you're sitting here, well, say you're sitting here, right, and you know you hit that kind of $1,800 sort of brick wall, okay, overhead resistance. You might say, wow, this is starting to be like one top, two top, three tops. Maybe it's breaking down. You could be easily talk yourself out of not going long. Now keep in mind, we had this beautiful trade down here, which went up $125 an ounce. Okay, so hopefully if you are trading gold, you would have got some of that, right? But where I'm going with this is that the software looks at other things and it thinks differently than our brains do. So therefore it said, hey, I've got certain things lining up. I'm going to go long. Now this was as good as it gets. Okay, from here to here, that was like $150 an ounce. But from this entry and this level to here, I mean, that's a whopping $238, right? This wouldn't have got filled, okay, because we had our arrow, but we never came back through our arrow price. So this, you wouldn't have got caught on the wrong side. So really, just to wrap up this little segment is, you have to kind of put aside your analysis and not overthink the signals, because you can always talk yourself out of a trade. Like, let me just show you this one down here. let's say you had this one here. You know, you could start to say, like if you like to look at trend following, right? You might say, wow, okay, it's starting to break trend lines, it goes down, right, like a higher swing low, breaks another trend line, lower swing low, that type of thing. You might say, you know what, I'm only going to look to go short, and it did work out in this one, right? But you could have talked yourself out of going to this one. Same thing here. You know, the market's doing this. Remember, trend following people, nothing wrong with this, but they're saying, okay, they're waiting for trend line breaks. It might be like something like this. Once it starts to break, they're looking for lower swing highs, lower swing lows. So they would go short here, which is fine, okay? But once you get into that mode of saying, okay, well, I'm happy I figured out what's going on, it turned out to be a very short-lived, not really a trend, just it's almost like a counter trend to what was going on from the bottom of the screen. So you could have said, oh, we got a downtrend forming, I'm not going to go long, so you'd talk yourself out of that. Same thing here. Let's say you did talk yourself out of it, and you said, oh wow, an arrow popped up, you missed that. So now you're thinking, oh, maybe we're getting back in a long trend, and you miss this arrow down, right? So anyway, just something to be aware of. I just want to go over a GBP CAD 15-minute chart. You can see here we had 3 down arrows, but it doesn't mean you just go short. You have to have several things happen, and one of them is, this is not 100% of the time, but I normally want to see it break below the arrow bar, okay? Or I have another indicator that I use that can help me make the decision. So once again, just because you get a couple arrows, and this doesn't always happen. In other words, let's say the market's going up like this, it doesn't mean you're going to get an arrow on every up bar, okay? It's just when the market starts to get really oversold or overbought in this case, and might start crossing down. So if it starts to cross down, then maybe it'll come back through up and then down. That's why you can get multiple arrows, all right? So you would have had a trade short here. When this thing rounded in this area, we could get in here. That was a really nice trade. Caught this little peak down there. That was a little sort of 35 odd pip counter trend to this as it started making higher highs, higher lows. Here's one. It did work out, but it doesn't. It went up like 21 pips. So this could have been the kind of trade maybe you'd grab a few pips right before it came back. But then the great thing is, as I mentioned earlier in this video, we tend to get tunnel vision. We form opinion like, okay, I'm in a bearish market or a bullish market, and we fail to see when things have turned the other way. So in this particular situation, you might have not taken this one because you see the market breaking down, but when you start seeing it going up a little bit, you might think, oh, maybe things are going to improve to the upside, and then you start to all of a sudden have a hard time flipping back to the downside again. So this caught a big move down just because the software doesn't care. All right, that overall was 96 pips. Even if you get out somewhere down here, still like 50 odd pips. And this is a situation, once again, sometimes you get a couple arrows as the market's falling like this, but you wouldn't have got in based on the criteria that I mentioned, that you have to go above that arrow bar. So sometimes what I'll find is I might be in like 3-4 bars early. This is one here where you're going to take some heat on it. In other words, say you got in here, that went up 44 pips. Let me see if I would have got stopped out. Normally I'm going to want to put my stop about 15 pips plus spread above the excuse me, the swing high. So we wouldn't have got stopped out. If you were running a tighter stop, you would have got stopped out. But I tend to like to have about 15 pips. Counter trend trade there. And this was like, you know, money from heaven. Right? This is as good as it gets because this went up. You rarely see this. 250 pips, all 15-minute white bars. I mean, it does not get better than that. If we could have one trade like this every week, we would all be millionaires, all right? Trade here. Anyway, you can see just on this one little time frame, tons of action. All right, I just want to wrap up with one last item here. This is the NASDAQ, a 5-minute chart. This doesn't happen all the time, but this is something that, especially if I don't refresh my chart, if you get a fast running momentum market and the market starts making some new highs, you can have a situation like this where you have multiple arrows. All right. Now you can see though, it doesn't do it on every bar. Okay, but what happens is sometimes when this starts flickering down, in other words, this thing is straight right now, but interbar it might have started turning down, it could fire off an arrow. Okay, that's okay because we're not blindly saying, oh, sell arrow, go in. We have to have a bunch of things line up. Okay, and whenever it's a steep market like this, we're just, you know, once again, we're not just going to jump in. We look for patterns where it tells us, all right, we're hitting resistance. The other indicators that come with the program that tells us, okay, it's running out of steam. We can't enter unless we go below certain levels. All right. So it's more like when we start getting a cluster like this, we're starting to break down, that we have a possible short. So anyway, I just wanted to make that clear.